All right, all right, all right. Here we are, ready to rock and roll once again. All right, on Monday evening, this is the lab, of course, for the Monday evening class. And Monday evening at the university, we had a class where we learned a little bit about day trading, and we kind of introduced you to the concept. And of course, day trading is trading in and out of the market on short time frames throughout the day. Now, there's two different kinds of day trading that we have. There's scalping and there's day trading. All right. So scalping is when we're just taking little tiny moves. So like if we were to just capture this little move right in here, that would probably be more of a scalp than a day trade. A day trade means that you're going to try and stay in the market for a longer period of time, maybe for 3 or 4 hours. All right. They're both day trading. And so you can kind of call them day trading if you want to. But for our purposes, so that we can stay consistent between ourselves, so that we know what you're saying versus what I'm saying, and we're talking about the same thing, we're going to call this little tiny short-term trading, just where we're going to capture these little moves in the market like this. We're going to call this scalping. All right. So this is scalping. Now, a lot of guys will call scalping something even shorter than that, maybe just like 5 to 10 seconds. They're scalping. All right. But for our purposes, we're going to call this scalping, even if we're trying to take a trade that lasts 6 or 8 or 10 minutes. All right. That's still scalping to us. And then day trading is going to be if we're going to try and take something for, 3 or 4 hours for the whole day, the majority of the day. All right. So we're going to do a little scalping today. And that's kind of what we're going to focus on mostly, because scalping is, it's what these little, the market has a tendency to do. It has a tendency to make these little runs like this, and that's what we want to try and capture. And since we only have 1 hour to trade, it wouldn't make sense to try and do a 5-hour trade or a 3-hour long trade if we only have 1 hour to trade. So we're going to scalp, all right, which is still day trading. It's still day trading. It's just we're going to call this a shorter term scalp. We're going to scalp little pieces out of the market, and that's really what it's called. All right. So the first thing we do is we have to remember back what we did on Monday, right? Monday night, we had our class, and we didn't talk a whole lot about the stock market because we kind of already have that under our belt from previous classes, or those who have joined our class at this point have a little knowledge of the stock market. I wanted to cover a little bit more about the futures market. So in Monday night's class, we talked about the futures market, and I was telling you the little bit of a differences between the two, how there's no pattern day trading rules over in the futures market where we have pattern day trading rules in the stock market. There's also other kinds of rules. All right. So like orders, yesterday you saw me placing some orders, and it wouldn't let me put different orders on the screen. Well, that was because of the number mismatch of quantity. I had a trailing stop. We were long 100 shares. We had a trailing stop of 100 shares. I wanted to put a limit price out there of 100 shares to take 100 off. It wouldn't let me do that because that's a rule in the stock market that says, well, you have a mismatch of quantity. So I had 2 exit points. I had a trailing stop that was going to exit me if the market went this way, and I had a limit order which was going to take me out of the market, catch my profits if the market went this way. So I set in 2 contingency orders. They don't like you to do that in the stock market. Why? Because you're only long 100, but you have the ability to liquidate here and liquidate here. So now you have a mismatch of how many you're in the market. They don't let you do that. Well, in the futures market, they do let you do that. So that's another rule that's kind of, it's like I was saying last week or the other day. Why do they have all these rules in the stock market? Well, they have to have rules or it wouldn't be a game, right? I mean, when you go to the store and you buy a game and you take it over and you lift the box up and you look at the back of the box, it has all the rules for the game. Well, you have the New York game and you have the Chicago game. They're 2 different games. The New York has a bunch of different rules for their game, and the Chicago has a bunch of different rules for their game. They're 2 different games. Now, remember that the exchanges are businesses. They are not government entities. So they can have whatever rules they want in their games. And so the Chicago markets have different rules than the New York markets. Now they are regulated by the government to some degree. It's dealing with people's money. The government likes to get their fingers involved. But because of the nature of the 2 different businesses, they're regulated differently. And so the rules can be different. And so that's what we're looking for right now is we're looking for different rules in the market. Okay, so the rules that we're working with today are going to be in the futures market. So once again, just for clarity, I'm going to give you this little window right here.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
Now, the reason I like to trade or day trade or scalp in the futures market is for multiple reasons. One, there's no pattern day trading rules. So you don't have to have a minimum of $25,000 in your account to trade. You can open up your account with a couple $1,000 and start trading. There's none of this pattern day trading rules, so you can do all this stuff over in the futures market that you can't do in the stock market. Plus, there's the example that I just gave you, the rule where you can't have a different quantity of orders on the screen at any given time. Over in the stock market, well, you can do that in the futures market. So there's lots of advantages in the futures market. Now, one of the disadvantages of the futures market is that you can't trade individual stocks. You can't go in and trade Amazon and Apple and Netflix and Google and all the wonderful little stocks that we love to trade. You can't just go in and trade those individually. There's a very limited number of things that you can trade in the futures market. And this is the list right here. In the stock market, there's 15,000 or more stocks that you can go trade. All right. So you got a huge selection of things that you can trade. And so that's a good thing. And it's also a bad thing. It's a good thing in that you have variety, right? But it's also a bad thing because now you've got 15,000 things to choose from and you got a limited amount of time. Which one are you going to choose? So now you have to have scanners. Remember, we had our bubble scanner that we were playing with yesterday. And you have to sit there and look at scanners. And you have to pull up different charts. And you're not familiar with them and you don't know really what they do or how they act. But you're kind of looking at all these different charts and you're jumping around and trying to find something that's trading. And I mean, it's fun, but it's kind of a pain in the hiney too, right? Because if you have to sit there and constantly look around for something to trade, that's not, I mean, it's fun. it's also, it's a pain in the butt. All right. So over in the futures market, having fewer things to trade is not as fun because now you don't have a lot of things to go look at. But, that's also nice because you're kind of like, well, I got my 5 things that I like to trade and that's all I trade. And for me, it even comes down to even less than that. When we scalp and we day trade, my favorite things are just the 4 indexes. Now, we can certainly day trade or position trade, go longer term trading for investing style, but this class is particularly talking about day trading. So we can go and do longer term investing on things like corn and wheat and soybeans and crude oil and Russell. These are the things that you can trade in the futures market. And I'm in the way, so you can't see the whole list. Let me move over here. So now you can see the list a little bit better, but this is the whole full list of things that you can trade. You can see in here, we got Australian dollar, Bitcoin, British pound, Canadian dollar, live cattle, feeder cattle, copper, corn, the Dow. So we have the 4 indexes, and these are my favorite things to trade. The Dow, the Russell, the NASDAQ, and the S&P 500. Those 4 markets right there are actually the most fun. Now, they're not individual stocks, but they are stock indexes. So they're a basket of stocks. So the Dow 30 has 30 stocks in it. The Russell 2000 has 2,000 stocks in it, but it's still just one chart. It's the average price of those 2,000 stocks. Okay, and as they move up and down, they move up and down, and you can trade that one stock or that index as if you were trading all 2,000 stocks. Same with the Dow, which is 30. It's 30 stocks. It's the average price of 30 stocks, and it's weighted a little bit and all that kind of stuff, the way they do that. But nonetheless, you got 30 stocks that you're trading on one chart. And then the S&P 500 has 500 stocks that you're trading all on one chart. And then the NASDAQ 100 has 100 stocks that you're trading all on one chart. But those are the only stocks we can trade over here in the futures market, are those 4 indexes. All right. So those are my favorites, though. I like to trade those the most. Those are a lot of fun. We can also trade gold and silver. We can trade the currencies. So if you're ever thought about trading the foreign currencies like Forex, well, we have all the foreign currencies here. So you can trade them right here in a much safer environment, in my opinion, because they're being traded on an exchange, and an exchange is regulated. So much more safe environment, in my opinion, than having it out on some dealing desk. And so that's what you've got, all the currencies in there. And then you've got, of course, the grains like soybeans and soybean meal, and you got corn and wheat, some of those things. And then, of course, the meats, live cattle, feeder cattle. You got pigs. We got all kinds of fun things that we can trade like that. And they're just charts on the screen. And as they move, you get in and take your signals and you buy and hope the market goes up, or sell and hope the market goes down. You buy low, sell high. So it doesn't matter what you're trading. You just want to find a market that's moving, right? And that's really the name of the whole game. So we can come down and for example, this is gold. We could come in and look at gold. Let's look at gold right now. We'll pull up the gold chart. So that's gold. That's the current price of gold. You saw, gold's been making a big rally, but now it's starting to pull back down like this. And so we can come down to a 1-minute chart in gold and just look at a little tiny chart. Remember, each price bar represents a 1-minute time frame. And this is what gold's been doing today. So that's 12 o'clock noon. So that's noon, and that's just kind of flushing down. Now it's kind of trying to go back up a little bit. But you can trade based on these little rallies, and whether you feel like the market's going to make a big run or a small run. You can scalp or you can day trade, try to stay in for a longer time frame. So we're going to come in and we're going to look at the NASDAQ today. Now, again, we have in here, we have the indexes. So I think in here I have all the indexes. Oh, let me see if I have all the indexes as a 1-minute chart. I don't. Mini indexes 1 minute. There they are. So there's my portfolio. Let's see if that's, oh, I've all cleaned them all out for us. The mini indexes in 1 minute, and I only have, let's get rid of gold, so that's not one of our indexes. So we have the NASDAQ, and we have 2 different time frames, right? We have, not time frames, we have 2 different sizes. We have the minis, and we have the micros. So now I'm looking at the NASDAQ. We also have in here, let's pull up the Dow just for fun. So here's the mini Dow. So, we're going to roll that over. Let me see. I'm going to go back over to where we were right here. And then I'm going to go in this list. I'm going to go to the mini Dow. I'm going to pull up the mini Dow, I don't want the portfolio of the mini Dow. I want to open up the mini Dow by itself. So we're going to come down here and find the Dow. It's right there. Mini Dow, Lan, if you could count, you could do your alphabet. Okay, so here's the mini Dow. We'll just open it up into the mini index portfolio. So I got portfolios turned on right here. So it gives me an extra window, and I can organize things by portfolios, or I can just have the list of things right here. So I'm opening this up into the portfolio. So now the Dow, you can see, is flushing out really hard today. All right, and this was pretty much anticipated. I mean, we're not doing anything out of the ordinary here. This is pretty normal. For those of you who follow me on a regular basis, you know that we do the Fibonacci Elliott Wave count, measure, setup, trigger, follow through, and the Wyckoff accumulation distribution model. And we're very much into that technical analysis stuff. And if you come to class tonight at the university, that's what we're going to learn. We're going to learn how to count, measure, setup, trigger, follow through, right? That's our 5 mantra steps to a successful trade. Well, tonight we're going to learn about Fibonacci, Elliott Wave, and accumulation and distribution. Probably the most important class that I teach all year. If you don't come to any other class, make sure you come to that one, because that class is the one where we learn the fundamental, it's like the foundation of building a house. Everything we're doing here, we're building one great big house, which is our portfolio house, right? But when you build a house, a foundation, you want that foundation to be solid. You want it to be concrete, right? You don't want to build your foundation on sand. You want it to be built on rock. So we're going to learn how to build our foundation tonight in class. It's going to be one of the most important classes that we have, to learn how to build that foundation. And we're going to go through and we're going to talk about how you can do that. I'm not going to go into it right now, because today we're just going to kind of introduce you to the idea or the concept of trading in the futures market. We're going to go over and place a few orders just for fun to try it out, show you some of the things that you can do. The goal today in this class, I mean, it's always to make money, but not really. We're going to mostly, I want to kind of demonstrate the software for you, demonstrate the tools, demonstrate how you can trade and how you can get started yourself. We're going to try and make some money, but that's not the general goal here today. Today, we just want to kind of get familiarized with the software and some of the tools. But tonight, we're going to build the foundation at the university. That's going to be really key important, all right? We're going to learn how to do the count and measure, and then the accumulation distribution models. And we're going to talk about that in length and in detail, so you can understand that and understand how to know when markets are going to make these big flushes like this. So when I say, well, this is just kind of anticipated, well, how did I anticipate that? I'm going to teach you that tonight at the university, all right? So when we come in here, we're going to come down to the NASDAQ. The NASDAQ is flushing down too. Again, it's nothing out of the ordinary. It's kind of anticipated. In fact, it's coming in a little late. It actually went up a little farther than we anticipated, but it's got to come back down. Every time markets go up, they also come back down, and there's a reason for that, and there's logic behind it. And so we're going to talk about the logic behind why markets have a tendency to rise and fall, all right, and what that logic is and how you can take advantage of it. So that's very important key point. So this is the NASDAQ. This is the Dow. The Dow's kind of flushing out too. We got a couple more in here. Let's look at the S&P. So the S&P is in here, S&P mini. Let's just look at the S&P mini. Of course, the mini and the micro, they look exactly the same on the chart. The only difference is how much money you make and how much you have to invest to trade them. So it's just a leverage thing. So the chart itself looks the same. So here we are with the S&P 500. This is the mini S&P 500. Again, it's coming down. It's nothing out of the ordinary. It's pretty much anticipated. In fact, we anticipated a little earlier. It stayed up there longer than we anticipated. So, you know, technically speaking, I was looking for this to actually occur right here. So it's actually higher right now than what it should be, if you want to look at it that way. All right. So the fact is that we had a little bit more of a rally in there than we anticipated at the top of this drive here. So that's the S&P 500, the NASDAQ, and the Dow. We've got one more. We got the Russell 2000. So we're going to come down here. PQR Russell is in the mini. There's the mini 2000. And so you can see how I'm finding the charts and looking through the charts and got my portfolios on, and we're in futures and how all this stuff is working now. So if you have your software and you've got it pulled up in front of you, you should be following along with me and doing the things that I'm doing. All right. So I want you to make sure that you're following along and doing what I'm doing. So Kirk's having problems with his internet, with his YouTube. All right, so we're going to come in here, and that's the four indexes. We got the Dow, we've got the NASDAQ, we've got the Russell, and we've got the S&P 500. Now you can trade them over here just like you can over in the stock market. You can buy low, sell high, stay in the thing for months. This entire time frame right here was one full month, right? This is another full month. Each price bar represents 1 day on this particular chart. So that's another month. So that's 3 months of the S&P right there. All right. So we're going to come in and go down to a smaller time frame. We're going to come down to the NASDAQ 100. So it's 100 stocks all being traded in one fund. And we're going to go down to the 1 minute chart. So now each bar represents 1 minute, which means that we've got one line from here to here. That's 1 hour. Okay, so that's an hour's time frame, not a 1 day time frame or a 3 day time frame. So you can see if that's 1 hour, you can see that each one of these bars represent 1 minute. So that was 60 minutes, 12 to 1. So each bar, so that's just that little run right there. That's only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 minutes, 12 minutes long. So that's would just be a scalp. All right, we're just going to scalp 10 minutes out of the market, and we're looking for opportunities to get into the market and look for the market to rise and fall. Right now, there's a strategy that I want to play with today. It's the simplest of all strategies. Okay, so we're going to come in here, and the simplest of all strategies, I'm going to fix my chair. All right, simplest of all strategies is this one right here. It's called Just Trade the Arrows Land. Now, if you've followed along with me and you've traded much with me in these labs, I've been doing, this is like the 400, and I counted them yesterday. And it's like 435 labs. 435 times I've come in here and been trading in these labs, different things, different strategies based on what we're learning down at the university. And now y'all know why I come at the university at night and don't have a voice. On Monday, I lost my voice. And now you know why, because I'm constantly talking, either teaching here or teaching other people. I'm talking all day long. So just trade the arrows land. This is a strategy that I kind of made up just simply because I have a tendency not to do this. And a lot of the students just say, "Land, look back in time. If you'd have just traded the arrows, you'd be rich, rich, rich beyond your wildest dreams." So I said, let's just put one in there called Just Trade the Arrows Land. And so that's what we're going to trade today. We're going to try and just trade the arrows. But we want to be, we don't want to just trade the arrows just because there's an arrow. And that's the most important thing about trading. You've got all these indicators, and they give you the arrows to trade, right? Now, many of them are perfect. They work really good, right? You can see how good they look. They work, but not all of them are perfect. They're only good if the market's actually moving, pumping, and going. If you go back in time and look, there's going to be times where the market wasn't pumping and moving. See, and it's going like that, real crappy, which is one of the reasons why I always say, if you get in and you're wrong, just get right back out immediately. Don't don't sit there and let the market go against you, because there will be another opportunity to trade again in the future. But there's also all kinds of little reoccurring price patterns that happen along the way. And we talked about some of those, and you see those in the supplement. So for example, here's a little reoccurring price pattern right here. You can see a little triangle formation, right? That's a pattern, and a breakout of that pattern. We saw that Monday night in class. There was a breakout and it went short, right? And went into a little pattern. And I even said, I said, it'll either go down or it'll go up. And this was shot right down out at the bottom. So that's what happens to these little, this is like a little pennant formation right here, see? But there's no arrow. The arrow was down here, and if you missed it, it goes up into this little pennant formation. And even though there's no arrow, that's still a buy signal right there, breaking that natural trend line to the next side up, right? So there's lots of little patterns like that that show up in the market that don't have arrows. So the question is, do you want to trade them or not, right? Do you want to trade those little patterns? Well, possibly they can make you some money if you want to trade them, or they might be a continuation. Now here's another little triangle formation. Look at this beautiful little pattern right in here. See, a little triangle formation. Well, you might have got in right here, right? You got in right here. You got stopped out right there. And then this little pattern comes along, it breaks out again right there. And then it goes up and makes all that money, and you didn't get it because you didn't trade that little triangle pattern. You're only trading the arrows. So it's nice to know more strategies than just one. But when you first get started, it's best to just try and just do one. All right, just do one. And if it's the one I think that maybe we ought to start you out on is this one here. Just trade the arrows, land. Just trade the arrows. So wait until you get an arrow, and then just put your positions in there and trade just the arrows. Now there's lots of ways to trade, and there's ways to capture reversals and all kinds of fun things that we can do, because the software is so dynamic. Again, like I said, this is like a Ferrari of trading platforms. All right. So this is like got so many ways to take advantage of the market, so many ways to catch reversals, so many ways to catch rising markets, so many ways to jump into the market and do so many things. It's fun, to do lots of different ways and to capture different trends and different patterns. Do you have to know all of them? No, but if you're a junkie like me, whatever you're going to shoot into your arm, you got to shoot all these patterns into your arm. That's why that supplemental document and the manual itself is what, 220 pages long, and then the supplement's another 200 pages long. I got more ideas in my head that I can teach you about than I can shake at a stick at 400 pages, and I'm still not done. I still have to write it all down in Pit News Magazine, come out every month with all these more things that we got to do. All right. So there's so many things. The market is so big and so overwhelming. Sometimes it's hard to decide what to do. So I'm trying to teach you to just start really simple. And I think the simplest and easiest way is with a small account, which you can't do in the stock market. So we're going to open up with just a small account, maybe $3,000 to $5,000, and we're going to trade just one or two markets in the futures market. And we're going to use the cheat codes. We're going to use the Fibonacci bars. All right. This is what most people look like. That's hard for me to look at. I don't like to look at that chart. I like this one here. This one here looks a lot easier to me. And so I like to turn on the Fibonacci. So I'm going to advise you that if you want to try this, maybe try doing what I do, which is using Fibonacci. And then we're going to come in and we're going to just stick to the four charts that we've got here listed: the Dow, the NASDAQ, the Russell, and the S&P. Does that mean you can't go off and trade grains, corn, wheat, soybeans? No, you certainly can. Once you get a little bit more experience under your belt, knock yourself out. Go out and trade crude oil. Go trade gold. Go trade silver. Go platinum and palladium, and go trade some Canadian dollars and Japanese yen. Go do whatever you want, But for me, I say let's keep it simple. And if we're going to keep it simple, let's just focus in on the four indexes: the Dow, the NASDAQ, the Russell, and the S&P. Now, the reason I like the NASDAQ is because it moves the most. It moves the fastest. It makes the biggest trends, and it makes the most money. Now, that might not be the best thing for you when you're very first starting out. So you might want to go with something like Little Cousin Russell down here. Little Cousin Russell, he's a little bit smaller. He doesn't move as fast. He doesn't move as big, and his money you don't make as much or lose as much money. But if you're worried about making or losing much money, you can go down to the micros and just trade the micros. So this is the NASDAQ micro. And again, we've talked about the micro versus the mini. It's exactly the same thing. The only difference is they're 10 times smaller. So depending on how much money you want to make. But we're going to trade down here on the mini because I like the mini. And we're going to watch the mini. Now, this is the mini is giving you an arrow. So we can say, do you want to take that short position? Okay, we're going to come in here and we're just going to trade the arrow. Now, I'm a little bit late to the party. It would have been nice to get in a little earlier. But we're going to put our stop order, again, just like we did last time. We're just going to put it on the little green dots. Now, I'm just going to drop it up here on the screen, right-click on it, say Edit Order. That pulls up, and I'm just going to tell it to trail on the ATR. we hit okay. And that's all we have to do if we're going to trade the arrows. All right. Now, the whole thing is you don't want to trade every single arrow. I think, again, as was mentioning, markets aren't always pumping, moving, and shaking. So you want to make sure that you don't try and trade every single arrow. But what's happening here is we're using an indicator called the ATR, the average true range. That's what that stands for. And it's really just a moving average of the market. And it depends on how small you make that moving average. Right now, we're using a period of 1, and I've got it set to a stop factor of 0.6. That's pretty tight. That's pulling that little dot right up in the hiney end of those little green price bars, right? See how close I got them right up in there? Now, you don't have to even use the dots if you don't want to. You can turn the dots off and just have it trail right behind the bars themselves. That's kind of a neat idea, right? Why do I even have to have the dots at all? You don't. You can just use the bars and just say, I want to trail 1 price bar back, or I want to trail 2 price bars back. And the software will trail right up those little flat bottoms. Now, the market doesn't always make flat bottoms. That's why we like to use the little dots on occasion. It's because sometimes you get hairy tops and hairy bottoms. All right. And if you get hairy tops and hairy bottoms, well, then if you're using price bars back, you're just going to keep getting nailed. So what we do is we use the little dots. Now, I've got the dots pretty tight in there, so you can see even the hairy bottoms are hitting all my little dots. But if the market's moving and pumping and shaking, we get flat bottoms all the way up and flat tops all the way down. And those are the markets we want to trade anyway. So we can trade either way. We can trade with bars, or we can trade with the dots. And I kind of prefer the dots because it does hold the markets back a little bit further initially when you get trading. And so it's going to hold the dots back a little bit so you don't get thumped out just to have the market go in your favor and make you money. Now, remember, we can make money if the market goes down just as easily as we can in these markets. If the market goes up, look, we're going to get stopped out right here. It's going to come back and touch our green dot. You rotten little booger. So we lost a little bit of money there, $35. All right, because we're in the big one. We're not in the small one. If we were in the 10 times smaller, we'd lost $3.50. So keep that in mind. So now we're going to get a little arrow right in here saying, hey, we're going to get a continuation formation. And oftentimes this is like what we get, right? This is your little ABC pattern that we talked about on Monday. Marks go up, they come down, and they go back up. Now, they also do it the other way too. They get the little, remember, we get a little 4-bar pattern, a couple of green bars, and then it'll turn and flush once again. Right? Remember that little up, down, up like this, little ABC pattern. So it goes both ways. So right here, we're like in a decision point. I call it decision point trading. We don't exactly know where the market's going to go, but it's on its way down, but it's also on its way up. So you've got what we call a progressive trend line. And that market's kind of going up through that trend line right there, staying above that natural trend line as it comes down. It kind of didn't come all the way down to that natural area right there. But you can see right in here, kind of started to go right across there. Now it's starting to go back up again. So what I'm going to look for is if it goes up and gives us a third green bar, well, I'm going to look for it to give us a little double top up in here and maybe fall once again. Doesn't mean that's what it's going to do. I'm just looking for it to go into a little wedge pattern up in there. If it gives us 2 bars here, we might want to take the drop here. But if you're just waiting for the arrows, you'd take a long here. But I'm going to sit on this one. I'm not going to take this one. I might feel bad about that, not taking that arrow, but we're going to wait and see. I think it's going to come down. So what we can do, here's another little trick. Now, I don't expect you to master all these tools as I show them to you. I just want you to be aware that you can do it. All right. And then we can work on your 20% of how to do it as opposed to when to do it. So right here, see those little dots coming up underneath? I can grab a stop. Now I can program these buttons in to do this automatically. We're doing it with the manual settings right now. But I'm going to drop this in there and just go right click, edit, and I'm going to say trail on the ATR. And now it's trailing with an open stop order. And that order is not filled, and you don't have to pay a commission on that order until it gets filled. So as long as it follows that little green dot up, it'll catch the reversal if the market turns and starts to fall. That's pretty cool, right? We use that as the same thing as a stop order for exit as we do for entry. Since we're not in the market long, if it hits that order here in the futures market, they let us do this. You can then take a short position off of this market. And so we're going to look for this market. We're going to sell first if the market turns and starts to fall again. Now we're going to do something. We're going to measure the distance between the low and the high. All right. From here to here. If it just comes back half or 50% of the last major move, we would expect the market to come back down into this region here, right? So back down into there. So that's kind of what we'd look for, see if the market won't just come back down a little bit. Right now, it's still going up. So we got our order to take the position only if it goes down. So we got a little arrow, and land didn't take the arrow long. So we're going to just take the arrow short. But we're not going to take the arrow. We're going to take the crossover, the little green dot, which is basically the same time that the market flips and gives you an arrow anyway. But it might give it to you a little bit sooner because it crosses the dot. And then once it crosses the dot, once the bar closes out, that's when it gives you the arrow. And so the market can move a little bit past the green dot before you get your arrow. So we're looking for this market to kind of give us this little ABC pattern, right? Little ABC pattern. So this is your A, this is your B, this is your C, and then we look for it to continue and drop and come back down this scale once again. So that's what we're looking for. Lower highs and lower lows. It went up a lot. Now we're just thinking maybe it'll come down a little bit. Now, if it doesn't, we just want to get right back out because there's a good chance it could just, there's nothing says it can't just turn and just keep going up because it is in an overall uptrend, right? Right there is our nice little uptrend. So it could just keep going up and stay above that trend line. So if it doesn't drop, we just want to get right back out. And I'm going to put my stop order to get out if it just breaks those highs right there. If it goes up there and breaks up, that means it wants to keep going. There we got out again. Now we're down even more. Look, now because we're in the big market, we're down $465. But that seems like a lot of money, but in this market, it's not. You can make that much money in, like, if we'd get into a position where we're going to try again here, it's going to break our little green dot. I'm going to put that on that little green dot once again. Oh, it filled it. So $400 is only about to right here. It would only have to come down and break this low and we'd be back up over $400. So this is a big market. But once you get in the market and the market's moving in your favor, you want to be in the big market because then you make a lot of money. When you don't want to be in the big market is when you're losing money. So that's why you need to cut your losers short. Let your winners run because the winners need to pay the losers, right? And you're not going to win every time. So you got to make sure that the winners pay the losers, and you got to keep your losers tiny. Don't have big losers. That was a pretty big loser, that $400 one. That was a pretty big loser. All right, we need it to fall to make money. And if it doesn't just immediately go in our favor, we're just going to get out again because it's being indecisive. The stupid market's not going down. They're just going to get right back out again. We'll lose again. We'll lose another couple $100. But I got to keep my losses small so that when we catch a winner, we don't have way too much money to have to pay back. So I have what we call I get what we call get backitis, right? So I like to get back my winners, get back my profits first before I worry about making a profit. So if I get down, like right now we're down $465. So if this market will start moving in my favor, I'll set a target to take my profits off at $465 just to get all my money back. Then I can start working again from a position of strength as opposed to a position of weakness. And we're in a position of weakness right now. You piece of junk. This market just suddenly died on us. It was making such a beautiful trend. I thought we might get a downtrend on this thing. And it's just chopping sideways now. So right now I should really just sit on my hands. I'm down $700. How far would the market have to go to make $700? Let's say we got in here. $700 would be right there. See, if it would just fall to this level here in our order, we'd have our $700 back. That's starting to get to be a sizable move. We might have to do it in a couple of different moves, little scalps here. But if this is too big, again, if we were in the other market, it'd be $76, not $760. So we're just trading the big market because it's fun. We like to trade the big market because when you catch one, it makes a lot of money fast. So I'm going to trail on that ATR again. I still think we're going to get a drop in the market. And I'd feel real bad if we missed it. Problem is, it's just chopping sideways now. So we're not trying to capture every single little move, and it's not going anywhere. Look at volumes died. Everybody left. Where'd you all go? Where'd everybody go? They made all their money right here. Now they're just leaving. They're like, we're done, buddy. We're out of here. We made all our money. Now we're gone. All right, come on. Let's see if it's going to go down. No, it still says it's going to go up. Maybe they'll fake to the upside and come back down. Come on, come on. We could go over and look at one of the other markets, but see if they're moving more. But they usually move pretty close to each other. If this one's dead, the others are usually dead too. I can't make the market move. Again, just like yesterday. The only power I have to make these markets move is to stab my little voodoo doll. The most frustrating thing is when a market won't move, and there's nothing you can do about it. Just sit there and stab your voodoo doll and say, move, move, move in my favor. It's all the power we've got to move the market. So if the market doesn't want to move, nothing we can do about it. It looks like it's making another one of these little patterns right here, doesn't it? This is a breakout. This is bullish. And we're sitting here trying to go short. See that little breakout right there? See all that? That's the same little pattern that we got right here. And that market took off and went up one time. So this would be drive 1. This would be drive 2. And if this breaks out and goes, that would be drive 3. Remember, we talked the market likes to go in 3 drives. So let's see if it's going to do it again, or we're going to miss it because we're looking to try and capture the fall. Just trade the arrow, land. Why don't you just get in on the arrow and stay there till you got an arrow out? Okay, you do that. That's why I showed it to you, so you could do that. All right, looks like it's trying to break out and go long again. We're going to catch the reversal if it goes up and tries to make a double top. Let's see if maybe come up here and test this high and turn around and fall. And if it goes through it, it'll just make another one, probably make another one of these little runs, just like that one. Drive 1, drive 2, drive 3. And we have a tool that we can use to bulls and bears. Has that little blue light, and it shows you the drive. See that blue draw, those dots? Drive 1, drive 2. Now we're going into drive 3. Just broke that blue light to the upside right there. See that? There it goes. Right there's our arrow. And now it's trying to test this high right here. I hate it when I'm that guy. The guy that kept trying to go against the trend. The trend is your friend until it bends or ends. The trend is your friend until it bends or ends. This looked like a bend to me. Looked like an end. I thought we might get a little drop down. And it didn't drop, did it? Just went through the little counter trend. Now it's broken this high, but closes above the high. That's not good for us. We want the market to fall. We don't want it to go up. We've still got our order sitting here, trailing up on the little green dots. So if it turns around and flushes out the bottom, we'll take it going that direction. But we need it to drop good for us so we can get our money back, get back itis. If we were in the smaller market, that'd be $76 down, not $760. So keep that in mind. Don't get freaked out by the dollars. Here we go. Now we're breaking. We're going to break down here. Come on. Is it going to fail? It's got a lower high on the tiny tail. So you can see we get a new price bar every minute. So this little countdown timer up here. Okay, we just crossed. I'm going to put our stop order. I'm going to put our stop order just above the entry bar, just above the bar that we got in on. So we don't take a big loss. Now it's starting to go in our favor. See, we're up 150, 160. Now we're down $700. So I'm going to come in here and I'm going to get rid of this one actually. And I'm going to put in what we call a OCO order. And it's a little bit more advanced. We're going to add OCO. And it's given us both a stop and a limit. So you see the stop, I'm going to put it just the same place as the last one was, right above the last bar. And that's where I'd get out if I was wrong. But if I'm right, this has a little calculator on it, and it tells you right here. See, 1,430? Well, we need 760. So we'll put that over at 760. 760. So if it'll just come down and touch that, we'll get our money back, and then we can start to operate from a point of strength instead of a point of weakness. Okay, be nice. Okay, go ahead, give it to us all in one bar. That would be nice. One bar all the way down. Take it, baby. Take it, take it, take it. Touch it, touch it, touch it. It's like candy. Oh, it's sweet. Oh, it tastes so good. Just touch that little line right there. A little bit further down, a little bit further down. If you get nervous, you can bring this down to break even, at least that we wouldn't lose any more. Okay, so we put that now at the same entry point. Come on, touch it, touch it. You want to do it. We know you do. Yeah, there you go. All right, we're up $10. So we got our money back, and that's the name of the game. Just get your money back when you lose. Now we'll just wait for the next setup. Setups and triggers. That's all we're doing. Setups and triggers. Setups, triggers, and recovery. Setups, triggers, and recovery. And hopefully, eventually, you don't have to recover. You start making money, right? So a lot of people will tell you, go listen to other traders, and they'll tell you don't do that. Don't take your money off at break even. If you're down, don't take your money. Just let it go. You make a whole lot more money because maybe this will just keep going and you made thousands of dollars and you got out for your 760. I'm not that guy. I would rather get my 760 back because there's a lot of, how many times have I sat here and said, well, I'm not going to take my money back, even though it gave it to me. It gave me my money back, but I didn't take it in hopes of getting more, only to have it turn around and go the other way and end up not getting my money back and having a losing day. So for me, there's plenty of trading opportunities. If the market says, hey, look, all right, Lan, yeah, you're okay, I'm going to give you your money back. If it says that to you, if it says, here's your money back, you take it. Don't be greedy. All right. Don't be a little greedy guy. Don't, oh, I want more than the money back. The market's like, hey, I'm trying to be nice to you, buddy. I'm trying to give you your money back. And if you just take it, you can have your money back. But if you're not going to take it, I might just take it all back myself and go the other way. I'm just trying to be kind. That's what the market, that's the way I think of it. Market is like a guy on the other side. It's one person, right? I'm trading against that guy on the other side. That guy on the other side is the mob. All right. So if the mob or that guy on the other side is like, hey, I'm willing to give you your money back, then you damn well better take it. Take that money he gives you back. There's always going to be another opportunity for you to put your order in and catch another trend. All right. So if you're down $700 and he gives it to you, take it. That's my opinion. That's my advice. But you don't have to do that. There'd be a lot of guys tell you not to do it. And in this case, look, we'd be up making more money right now than if we hadn't taken our money off. But for me, I don't care. I don't care. I just wait. There's plenty of more opportunities to trade. Market's got lots. Look at this. Lots of little runs, lots of little bumps, lots of little moves. Some of them are really nice. Look at that. Man, if you'd have caught that one. Woo. Just trade the arrows, Lan. Okay. Arrow to stop out right there. That was $5,915. You'll catch those on occasion. On occasion, you'll have your order in there and you'll make a $5,000 trade like that. And you'll just think you're on top of the world. And what that really does, kind of gives you the buffer so that when you screw up and have some bad days, had bad trades, then you can, cover yourself and still stay alive. But if you're not in the market, if you're not trading, you'll never catch those. All right. So now the market's still going down. It's breaking that downside momentum. So we got that little break here off of that little top formation. So that was kind of a little wedge pattern there. It's breaking out the bottom here. Now what we want to do is we want to see, I'm going to turn off the bulls and bears blue lights. And we're going to come in here. We're going to watch the red and green. So what we want to see now is we want to see this market starting to look like it wants to. Not really. It's not really coming down. I mean, here's the bottom of that trend, and it didn't even make it to the bottom. So right in here's your areas of support. Let's make those a little brighter so we can see them. Okay. So that's kind of, it came down and kind of touched this area of support here, and it's bouncing back up. Now what we want to see is maybe a couple little green ones. If we can get a couple little green ones and then another flush down. All right. So that would be the next play. Got 15 minutes till the bell closes. Oh, it looks like it's going to go right off there. We got a real small risk. It's that green dot. If it starts to flush, you could take it and then just put your order on the green dot. Real small. If it doesn't just immediately go in your favor, just get out. Take a tiny, tiny loss. Come on, buddy. Drop once more. No? Yes. Okay, look at the volume down here. We're getting increasing bar on a red bar. So that's volume's going up on a red bar. That's good. That's what we want because we're short. Now look, we're up 350, 360. If it touches that line, that would be a good spot to exit if we had more than one contract. But it's still falling, still falling. There we go. Watch the little tiny chart up there. As soon as it starts to go back against you, you can take out, just take your profits off right there. That'd be a quick, nice, beautiful little scalp. Keep going down. Oh, okay, that's it. We just took it off. $720. That's what you call scalping. All right, that's scalping. So we're up 720. We were down 720. We got our 720 back. We got an opportunity to get in, take another position. Now we're up 720. That's not bad. Now, this is a big market, and I wouldn't expect you to really come in here and trade this market at this size until you're kind of ready for it. And ready for it means that you're going to have a little bit of experience and time behind the market. All right. So we're going to go to a smaller market now that we've made a little bit of money on this one. We'll go to a smaller market and trade so that if we do lose some of our money, we don't get wiped out. So once you make a nice trade like that, you can go to a smaller market and still trade and not risk nearly as much money. This is the Russell. Let's go down to the Russell 1 minute. And next week, I'm going to introduce you to something called range bars. Actually, we'll have probably Monday. Monday, we'll have another lab. Monday, well, what's today? Today's Wednesday. We have class tonight. Let's do a lab tomorrow. Yeah, we got to have a lab tomorrow. So what time should we do the lab? In the afternoon or in the morning? I think we do the afternoon is better because we'd like to do this in power hour. So tomorrow, Thursday afternoon at 1 o'clock. How's that? We'll do another lab tomorrow. The labs these days are changing up from the summertime. Summertime, I didn't have classes. So we just had labs Tuesday, Wednesday, and Thursday. But now we've got classes. And the classes are determining, I'm teaching every Monday, Wednesday, Friday in the classes. And then we're having labs on Tuesdays and Thursdays. We actually had a lab yesterday and today. So we've actually had 2 labs, this lab and the lab before on yesterday. So tonight we have a class. We should have a lab tomorrow. The only question is, should we have the lab for tomorrow? Should it be in the morning at 8 o'clock in the morning, or should it be at 1 o'clock in the afternoon? I think we'll do it at 1 o'clock in the afternoon tomorrow so that we can do more day trading. But we can also, I can introduce you to some different types of charts. These are called, price bar charts. These are 1 minute charts or minute charts. I'm going to introduce you to what we call range bar charts. And I really like range bar charts. In fact, I like range bar charts better than 1 minute charts. 1 minute charts are easier to understand, but I like trading range bar charts. So I think I need to introduce you to that. And we'll do that tomorrow at 1 o'clock in the afternoon. We'll do another one just like today. Today's 1 o'clock. Tomorrow, 1 o'clock. But tonight at the university, we have class tonight. And tonight, we're going to be learning the foundational structure of trading. So make sure you make tonight. I would have to say that this is probably, anytime you build a house, which is what we're trying to do, right, with our trading structure, the foundation is the most important. And tonight, we learn the foundation. So tonight's a really important class, really super important. You don't want to miss tonight's class. All right, look at it go. Boy, it's really going. We took our money off and it's still falling. Now, this is the Russell, so it's a little smaller market. Even though it's still a mini, this is still a mini, it's a smaller mini. All right, so the distance from right here where you got in to where it's going now, see, that's $195. Whereas on the NASDAQ, that was $750. That was $100 here. So see how much smaller this market is? This is a lot smaller market. So even though it's a mini, it's a smaller market. It's not a micro, it's just a smaller mini. So that's why I kind of like to trade the Russell too. I like to trade the Russell, but I like when markets are really moving and shaking and making nice trends, I like to trade the NASDAQ, because once you catch that trend, man, you make a lot of money fast. And that's really nice. It's fun when you can catch a trend and really make a lot of money fast. And so then if you're down here on the Russell, well, that $700 trend would have been a $100 trend. But if you'd have been doing it on the micro, it would have been a $7 trend, right? So kind of find your happy medium of where you want to be. These 4 different markets are different sizes. Of course, it's the same with all of them. If you come in here, gold, you have gold mini, gold micro, you have lean hogs. If you go and trade lean hogs, that's going to be closed right now. But platinum and palladium and silver, soybeans, crude oil. Let's go look at crude oil. Crude oil's open. So you can come and look at crude oil. And crude oil is, we want that is December. Let's go to January contract. Okay. So we're going to go to crude oil and we're going to open up just the 1 minute chart. And it's not moving. What time's it close? Close at 3 o'clock. We're still good. How come it's not moving? I don't know why that's not moving. Let's go look at the other crude oil. This one here is the December 1 minute. It should be closed. That's not moving either. Let's go back to the NASDAQ. That one's moving. Yeah, it's still moving. Dow's moving. Maybe those markets are closed and I didn't know that. I thought those are supposed to be open right now. All right, here's the Russell. We'll trade the Russell. But you could go trade the crude oil market, and if it's moving, it's not moving right now. So we'll close those. NASDAQ. That's why I kind of just like to stick to the indexes. All right, so now we're going to use another little tool. Again, let's come in here. Let's remove the dots. Now we're going to just trade right off the bottom. I'm just going to come in here and drop this in and edit. See, I'm not using any of these buttons down here. Right now, I'm just doing these buttons right here. So we're going to come in here. We're just going to go trail on the price bars back, and we're just going to trail 1 price bar back. All right, so now it's just going to trail 1 price bar back from the green bar. So now if we get another drop, we'll capture a short position. All right, so we'll look for the market. We don't need the dots anymore. We're just trading the red to green, or highs and lowers. So if it breaks below that green bar, then, well, now see it jumped all by itself to the next bar, because every 1 minute we get a new bar. And so what's going to happen is as soon as it turns around, starts to fall, breaks the previous bar, if it starts to go down, we'll be in it to make the next leg down, right? Which is that little A, B, C, and we'll look for it to keep on going down. A, B, C, D, A, B, C, D, A, B, C, D. No arrows. No arrows, just the color. So, okay, we're short right now. We're going to take our order. If we're wrong, we got to get out. Just get right back out. If it doesn't just immediately go in your favor, just get out. Take a little loss. I'm kind of a little close there. I put it 1 bar back, just above the bar we got in on. Come on. Don't be stupid. Yeah, there you go. Now you're smart. See, if we make money, then you're smart market. If we lose money, then you're a dumb market. Come on, smart market. All right, now see, we're only up $30. But that's also means that on the other side, if we lost, we don't be losing like $30, not 300 like we would if we were in the NASDAQ. We like the NASDAQ because when you make money, you make money fast. But of course, when you lose money fast too. So this is a little bit smaller market, but still the mini, Russell mini. So we're up $35 right now. So this might be a little bit better for you to start with. Right? You don't want to do the micros. Micro would be $4. That might be a little too small. Low down killer. He's still talking about the dividend stocks. Everything's on sale right now. Market's flushing like a toilet. My portfolio's screaming. Throw me a lifeline, land. Oh my gosh, that stupid market. Look, it's coming back already. Are you going to really chop us out like that? You rotten little stinky. Go down. I don't trust it. It's going to give us our money back and just take it off. We still lost $50, $15. That got stupid on us. It should have just kept going down. So when it said, well, I ain't doing it. I ain't playing. I ain't going to play your game. Get back out. Let's wait and see. Now we can turn our little indicator back on, ATR, and see where the arrows are. Just trade the arrows, land. I like to just trade the colors. Green to red, red to green, green to red, red to green. First green candle, make a new high. Boom, get in. Unless you're on the downtrend, then it's just a little pullback. Then you want the next red, right? Yep, NVIDIA is going to do their earnings call today. What do you think they're going to do? You think they're going to post a profit? Those guys are unbelievable, right? Oh, look, we got this that stupid little thing. Now it looks like it wants to go down again. It's chopping sideways through a little triangle formation. Look at this. Priced for perfection. It's trying to go again. It's trying to go again. See what happens here. There it goes, breaking out the bottom. See if it'll pull back up in there one more time. It won't. We just missed it. Got 5 minutes till the market closes. It's trying to flush out. Look at that. Oh my gosh. Oh, that makes you feel sick when you miss one of those. You're like, I had that one. And they come back and spiky dikey dude me right there. It's like a good running back. Bam, take you out and boom, drop. That's what they like to do. They love it. They love it. That's their favorite little trick. He's breaking the low right now. That makes me sad. That's a sad state of affairs. Look at this one dropping. Look, we'll come and take it. We'll take it here on this one. I don't trust it, but we'll take it anyway. There we go. Okay, and we'll put our 3 stops on that little green dot right there. Trail, price bars back. No, we're going to do ATR. All right, let's just see if it'll go. We're up $50, 50.60. Now, I'm at 3 contracts on the NASDAQ micro. All right, there's a micro, not the mini. But we got a little buffer. We got $700 to play with. So we don't want to just give up all that $700, but we can still trade. We've hit our goal. Our daily goal is $500. So when we're day trading in the futures market, your goal is $500. Unless you're in the micros. If you're trading the micros, your goal is $50 because it's the same, right? It takes just as much to make $50 in the micros as it does to make $500 in the minis. So if you can make $50 in micros, you've done the same thing as you would have done in the minis for $500. So our goal is $500 a day. $500 a day keeps the doctor away. All right, we're up $97. And this is the micros. We went in with 3 contracts, though, so we're 3 times as big. All right, let's put our stop. Oh, do we have our stop? We already put our stop in. We have a stop. It's on the, yep, it's trailing the ATR right there. So we're good. We have nothing to do. Here, all we got left to do, oh, we don't want to stab that guy. That's the wrong one. This is the green one. That makes markets go up. You're safe right now. Just stay right over there. We're going to stab this guy. All right, go, 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 go. Market fall, market fall, market fall, market fall. Go, go, go. Nice, big, long, red trend. I think we're not supposed to stab him if it's going in our favor, right? Don't stab him. Say, we'll stab you in the neck if it turns around and goes back. Oh, market just closed. Stab you in the neck anyway. We get stopped out. Shouldn't have stabbed him in the neck. All right. So we're $674. That's $174 above our goal. That's not a bad little trade for the day. The market's closed. Now, the market didn't really close in the futures market. The market will trade for another hour. And then it'll close for 1 hour and then opens back up. See, if you come over here, this is a 23-hour market. So see, close time is 3 p.m. So it's 2 o'clock right now here in Utah. So close time is at 3 p.m. So the market just closed at 3 o'clock, and it's only 2 o'clock. So we got 1 more hour. That's the after hours, right? The after hour session over in the stock market, but it's 3 o'clock here. So it closes at 4 o'clock, but then it opens right back up again. Open time is at 4 p.m. It closes at 3 p.m., 4 p.m. It opens right back up again. So it's only closed for 1 hour. And in that 1 hour, that's where they do their mark to the market. That's where they do their accounting. So that's where they settle all the books. They have 1 hour to settle the books, and they open the market right back up again at 4 o'clock. So 4 o'clock, this market will open right back up again. Close at 3, open at 4. Isn't that crazy? It's only closed 1 hour so they can do their accounting. And then it's a 23-hour market. You can trade it 23 hours a day. And then it'll close Friday night and Sunday open. It opens at 4 o'clock p.m. Sunday night. So even if you're a Sunday night watching a Sunday night movie, right? The ABC Sunday night movie, and you can sit there and trade Sunday night. Oh, look at that. It's spiky dikey dude, our little trailing stops only to flush out. Loves to do that on weak markets. Craziness. Look at it go. Wow. Wow. I hate it when it does that. All right, guys. We're up $674. That's not bad for one little trip, one little scalp. All right. We got our money back, and on to the next best thing. All right. If you guys have any questions, let me know. And for those of you who are not aware, you can go to my website at landturner.com, and you can sign up for a free session just to talk to me in person about your goals and your aspirations. If you have any aspirations. If you don't have any aspirations, we'll just talk about your goals. How's that? Your goals and aspirations. All right. Aren't that the same thing? Is that kind of like saying, let's talk about your goals and your goals and aspirations. Okay. So visit me at landturner.com, sign up, and we'll talk to you I'll just give you a phone call. You set it up on my calendar. All right. You can do that. And then for those of you who have not yet bought the good little Pit News magazine, then we got this guy here who's going to tell you need the Pit News magazine. Watch
Look,
this.
folks, I was reading this thing, Pit News, right? Great stuff. I mean, back in Scranton, we had newspapers, but I didn't have, the thing with the facts. Claire Christensen, she gets it. Sharp gal. Reminds me of my Aunt Margie. Could parallel park a Buick with one hand. Subscribe.
All right. We would never use AI to get celebrity endorsements, but Joe Biden, man, that's one of the best ones that came out. That's so funny. I love that one. I love this one too.
Look, if you haven't subscribed to Pit News magazine yet, then I'm going to need to see you professionally because you must have something wrong with your brain.
Claire always wants me to play her little cartoon, but I don't like to. It's embarrassing to play it because it's a cartoon. She's so sexy.
Okay, quick question. Are you subscribed to Pit News magazine yet? No? Really? Then what are you even doing with your life? Here's the deal. Pit News on air is like the espresso shot. Quick, a little chaotic, and probably too much of me. But Pit News magazine? That's the full latte with oat milk, cinnamon, and that fancy latte art you pretend not to care about. Subscribe to Pit News magazine at pitnews.com. Because if you like hearing me panic about Fibonacci levels, wait until you read what the pros are actually writing. And don't forget to follow my weekly podcast, Pit News on Air, where we take the best of the magazine and bring it straight into your ears. Do it now. Seriously. Because if you don't, Mr. Turner says I have to come to your house and personally explain options trading, and nobody wants that. Okay, quick question.
No, nobody wants that. Nobody wants Claire coming to her house. I told her I can't play that, Claire. I said she gave me that little AI picture of herself that little cartoon. I said, I can't play that, Claire. That's too sexy. She says, what? It's YouTube. This isn't church. So I said, okay. All right. So this is YouTube. It's not church. All right. So that's why you get Claire.
Hey, Land Turner here. I got a hot stock market tip for you. Subscribe to Pitt News Magazine. You can thank me later.
How come you guys haven't subscribed to Pitt News Magazine yet? Subscribe. Pitt News Magazine. All right, guys. We'll let you go. We'll see you tonight. Bright and early, 6:00 p.m. If you have any questions, let me know. Go, Claire. She's funny. All right. We'll see you guys tonight at the university.
All right. That wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.